Hello, I'm Rebecca Jane and welcome to Midlands at Home. On this week's show we're going to be talking mortgages, a vast and ever-changing subject area that I think for most of us can seem a little bit of unknown territory when it comes to buying property. Also, what's been going on in the papers lately regarding mortgages and getting some expert advice. Our guest today is Jeffrey Robinson from Independent Mortgage Hypermarket. Jeff, welcome to the show.
Good morning.
Thank you for joining us.
No problem.
Tell us a little bit more about Independent Mortgage Hypermarket.
Well, it's certainly a family-run business. It's been going about 15 years. Set it up after I left Barclays, and there's a team of, we've got about 3 advisors based out in Brown Hills.
Brilliant, and it's one of those areas, isn't it? There's so much to think about. There's so many products that I think, you know, when you're purchasing any type of property, it can seem a little bit of a headache. So I guess you guys are there to hold our hands, to guide us expertly and to sort of show us all the products and what's available. So what advice do you generally sort of give to your customers?
Yeah, I think you're exactly right in what you're saying. It's such a stressful time for everybody. Yeah. It's bad enough trying to find the ideal property, let alone the mortgage side of things. And probably I can't think of another time when it's been more complicated than it is right now.
Really?
And for people certainly starting out, then if they're trying to do it themselves, then what I'd say is don't give up hope just because you've been turned down by a lender, because the market is so complex now that actually it's really easy if you're trying to do it yourself to actually make a mistake. Right. So certainly my biggest tip would always be don't give up hope and make sure you use a mortgage broker, because you really will need the help.
Yeah. I like that, actually, don't give up hope, because I think you do think if you've had one knockback from one lender, you think, oh, that's it, can't get a mortgage. But actually, have you found that you have had customers in the past that maybe one lender hasn't worked for them and then they go somewhere else and then it all works out well?
Absolutely. We see it obviously on a daily basis, so that's where we can sort of come from. And I can think of a client in the last couple of months whereby it's going with one lender, just normal high street, and it was like, God, this person is absolutely terrible, throw them out your office sort of response that they gave back. And we sort of look at it and think, you know what, these seem really good, genuine people. It doesn't make sense. And so we literally placed it with another high street lender. It might have been about £3 a month more expensive. And their response was, you know what, these clients are absolutely A1. Yeah. We'd happily give them the money. They need hardly any deposit. And you can get that much variance from one lender to another. It's a really ridiculous time at the moment. Yeah.
And I think when you're looking at how much can I borrow and it's done on your salary, how much can you borrow nowadays against your salary?
I think sort of prehistorically, people always worked on like 3.5 times, 4 times joint income. But the world's really changed in that respect. And so, yes, in theory, as a guide, 3.5 to 4 times your joint income, but that is only a guide, because the lenders have all got affordability calculators now, whereby they'll actually look at what's your income, what are all your outgoings, and everybody's got different outgoings in reality. Yeah. So it's not just, oh great, I earn 25,000, 100,000, times that by 3, there we go. Yeah. It's not that straightforward by any stretch. And again, that's just where the market is just so complex now. And for some people, they'll go outside of the ×4 multiplier and they'll go higher. And other people, if they're getting a little bit older or they've got loans and different things like that, then those multipliers can come right down.
Yeah, so many factors and many considerations there.
Hugely, hugely. Just get advice.
Yeah, get expert advice. What about interest rates? What's your opinion on interest rates and where you think they may be going for 2015?
Everybody's always sort of looking at that, and you watch the news and
do I wait? Do I do it now?
Do it now, that's right. Can I even do it? And they're always talking about interest set to go up. I've done you a bit of a display so you can see what's happening with interest rates, which is what I always like to take a guide on, what's happening with interest rates, which are fixed over the next sort of period of time. And so you've got fixed rates ranging from 2-year fix at sort of 1.99, I think there is out there at the moment.
Which is great.
Yeah, absolutely. Ranging to 5-10-year fixed rates at only a 1% increase across the whole 10 years. Gosh. So are interest really going to go rocketing? Yeah. I just don't see it. The people who kind of set the interest rates are paid vast sums of money to get it right. Yeah. So I like to be guided by that, really.
Yeah, and if you look at how they have varied over the years, I remember my parents saying that, I think it was in the 90s, when interest rates, I think it was only for a day, wasn't it? But it suddenly went up to 16, was it? Right,
yeah, I think it was. But as you say, literally for a day. And I think over the last sort of 7 years, there's always something happening.
Yeah.
Oh, it's going to go, it's going to go, it's going to go. And then actually in reality, has it?
That's it.
And I don't remember the last time I saw a report saying interest rates are going to come down. And yet interest rates definitely have come down in the last quarter.
Yeah, you can get some amazing deals. I think there was something with the HSBC the other week where they were doing a 5-year fix. It was the lowest ever at 1.99%. I mean, there are some
phenomenal.
crack of deals at the moment, aren't there?
Absolutely phenomenal. And I think we'll see other lenders following that route as well. The shorter-term interest rates, again, are all below 2%. Yeah, there's various different conditions with it, so not everybody's on that. But certainly, yeah, that doesn't sound to me like we're going to have suddenly base rate of 3% or anything like that. I think if they are going to move, it'll be really small amounts over a long period of time, which is good for the market, really, because we want the safety and stability.
Yeah, and what about if you're buying a property, you know, and it's your first property, you're trying to get your foot on the ladder? It seems to be getting harder and harder for people to get their first property.
Yeah, it is. But the government's doing a lot of things to sort of help. So you've got the Help to Buy now, whereby actually you can get some really good rates in relation to, say, 2 years ago. Interest rates for people with only a 5% deposit are probably 1% cheaper now because of the help that the government sort of put in place into that. So in that respect, it's getting a little easier, but it's one of the high loan-to-value mortgages where you've only got a small deposit is a niche area at the moment. And so with all of the banks, as they've all kind of restarted again throughout the sort of recession, then they're all very much banded into these are the kind of clients we like, or no, we don't want that sort of client. So yeah, you might go to whoever you bank with and they might say, no, can't help. And it might be actually they just don't really like first-time buyers. And actually if you went to the next bank, yeah, we do first-time buyers, brilliant, off we go.
So it goes back to that same thing of, you know, don't worry that if you might not get the first one, doesn't mean that you're not going to get a mortgage with somebody, just keep trying. And
but get the advice, because the one thing you have got to be careful of is with regard to your credit file. It doesn't look very good if you've got endless searches on there from the various different lenders. So again, it should be easier, the process should be easier to be able to do it yourself, but unfortunately the banks are still learning, even though they've been in business for how many years. It's a forever changing circle. So just get advice and you've got much more chance against success.
Yeah. Talk to us about fees then, because, you know, you get a mortgage, you normally find there's an arrangement fee. You can either tag that onto your mortgage or pay that up front. Anything that you should be looking out for in terms of when you're getting a mortgage with any fees?
A lot of that depends on if you're trying to do that research yourself. What we always advise is if there are fees involved in the product that you're looking at, make sure you kind of work it out on the deal. If you're having, say, a 2-year fixed rate and it's got, say, £1,000 fee, then we always kind of analyse it, right, that £1,000 divided over the 24 months
it's
that
only
you've
a
got
1 year, you know, then it's no, you know, may not be such an amazing deal.
That's right, because in reality, at the end of the 2 years, then you'd be renegotiating your deal, going to a different lender or getting a different deal with that lender. And so it's important not to think, oh, it's £1,000, it's over 25 years that you've done your mortgage over like it's nothing. No, you've got to cram it into that period. And then, because actually a slightly higher interest rate with no fees, all the rates that I showed you earlier, every one of those have got next to no fees.
Right.
And again, it just varies on how much you're borrowing. If you've got a big mortgage, it's better to have a lower interest rate with some fees. If you've got a small mortgage, well, you don't want any fees and it's worth paying a little bit more for it.
And what about, I heard the other week that buy-to-let mortgages are a little bit easier to get at the moment than a standard mortgage and your typical mortgage. What do you think on that?
Buy-to-let has really exploded over the last 5 years. It's probably one of the things that's really pulled us out of recession in the housing market. So yes, it is getting easier. Typically, if you're going to want to be involved in buy-to-let, then 25% deposit is where you should be to get the really good interest rates.
Okay, right.
But you can actually get sort of 80% loan to value, which is great. But it's more, God, that property is an absolute bargain, gotta have it. Then it's worth paying the premium. But on the whole, 25%, yes, they are getting easier because the mainstream lenders now can say, actually, you know what? Everybody's putting a really good deposit. Invariably, they own another property and they're being deemed as a really safe risk. So lenders that didn't deal with that arena before have now really opened it up. Yeah, we want buy-to-let business, come and get it. And so for landlords, and we look after loads of landlords, actually that's really bringing down the cost of the finance at the moment, which is brilliant.
That's interesting.
Yeah,
it does seem to be really, really popular. Just need, I'm hearing agents say all the time that they need more buy-to-let properties. So
yeah, and the amount of people that are buying buy-to-let properties at the moment for part of their retirement planning.
Yeah.
So we're having like 70-year-old people coming along. Actually, I think I'll go with my pension money, which is doing nothing. I think I'll buy a buy-to-let. Some of them are having finance, some of them aren't, and using that as their retirement income because it seems like a safe bet.
Yeah,
in the UK, we love property.
We do, and we always say, it's kind of a safe bet, isn't it, to put your money into property?
Yeah.
So, yeah, definitely. Don't go anywhere. Join us after the break, where we'll be looking at what's been going on lately with the papers in regards to property. Also looking at Deal of the Week from Independent Mortgage Hypermarket and the new fees-free estate agency, Free Move. So I'll see you in just a couple of minutes. Welcome back. We've been chatting to Jeffrey Robinson from Independent Mortgage Hypermarket about mortgages. Jeffrey, this is a business that must surely keep you on your toes on a day-to-day basis. Changes all the time, new products.
Yes, very much so.
Yeah, always changing, always things to, I suppose, you've always got to be ahead of the game, I suppose.
Yeah, we have always got to be ahead of the game, so we're always trying to develop the business. We're really proud. We've actually just won most loved mortgage broker in the country for the 4th year running.
Oh, I like that.
And so, as I say, we sit down regularly because we strive not just to sort of be the best kind of in our area, but out of our area. We do a lot of business down in London, and generally down the sort of M5 corridor. Yeah. So we'd sort of sat down and thought, you know what, how can we deliver some more for our clients? Yeah. And that's where Free Move came in.
Ah, excellent. And we're going to chat about Free Move in a little minute, actually. There's a couple of articles in the paper that we were looking at a little bit earlier. The one is mortgage costs that you can see here getting cheaper. Competition amongst mortgage lenders have intensified, brokers say, with a greater willingness to lend to those without huge savings. And that was from quoted from the BBC, and that was on the 20th of April. I think there's a lot to be said, actually, with deposits. We worry about that, don't we, with deposits and how much is needed for mortgages?
Yeah, certainly. Because of the way that the government geared everything a few years back, then the lenders had to very much pull back and change their risk model. So, yes, if you hadn't got such a big deposit, it was going to cost more because it was costing the banks a lot more. Yeah. The government's relaxed that, as we've seen with the Help to Buy that we mentioned earlier. And so, yeah, that has helped lenders be able to bring down the costs of the borrowing and be a little bit easier. It's still quite a small marketplace, in my opinion, if you've only got a 5% deposit. But when you start drifting into sort of 15%, there's a real big saving to be able to get to a 15% deposit. Yeah. So, yeah.
Yeah, and it says here, a quote from the BBC, a new record rate 5-year mortgage, newly on sale, still requires a 40% deposit. That's what's saying.
Yeah, that's right. I mean, nothing's going to change in that sort of remit. Obviously, the more deposit you've got, the better the rate, because the lower your risk. Yeah. So, yeah, that's no sort of great surprise. But as the market becomes more competitive, you'll see more and more lenders coming out with rates at that sort of level. I mean, having said that, we've just done some deals for clients where it's been less than early 2%, where they've only got sort of 20% deposit. Yeah. And so there's absolute bargains out there at the moment.
But it is lovely seeing these 1.99s and really, really low rates. I'm really surprised. I think it's brilliant.
I mean, I was with a client that thought he was really stuck with his lender, and he got a reasonable deal at 3.99. And actually,
that's great, isn't it?
Yeah, which is not bad. He had been stuck on this deal because he thought he couldn't do anything, and we actually just sat down with him, looked at it. Actually, we were able to chop that straight out, and it brought it down to 2% and saved the guy nearly £700 a month.
Wow, that's a huge saving, yeah.
And it was one of those cases where, because it got interest only, you can't actually place that very easily around the market. People think it's impossible, but it's not. So again, there's an awful lot of people out there. I mean, I tend to specialise with self-employed people.
Right. Because that's another thing, isn't it? How many years accounts do you have to have when you're self-employed?
Yeah. It can vary really complex.
Depending on your lender as well, can't it?
Yeah, that's right. It really does. So I love the more complex cases. But the amount of self-employed people who feel totally trapped and are paying nearly 5%, maybe even more. And actually, get the advice, because there's deals out there and you can get them even if your accounts aren't as strong as they should be.
Yeah.
Double check.
Yeah, no, that's really good advice. The Guardian was saying, buy-to-let looks tempting as rates tumble. This is on Saturday the 25th of April. Buy-to-let mortgage rates are tumbling, which is great news for old people thinking about spending some of their newly liberated pension pot on an investment property, but less so for struggling first-time buyers competing with landlords for a home. So that's quite an interesting article, wasn't it?
Yeah, it's quite interesting. Probably one of the biggest developments I've seen, if, as say they're referring to the sort of the older generation, it's the fact that actually buy-to-let mortgages, a lot of people think you've got to finish at 65, 70. And actually what we've noticed, we're getting people sort of 70, 75 wanting to buy buy-to-let mortgages and having finance on it. So actually you can finance your buy-to-let mortgages, I think about 80, 85. Absolutely brilliant.
And buy-to-let mortgages, they operate in a totally different way, because is it actually what's going to be your rental, what is going to achieve with rental value per month, and that's what they do it all on?
Again, the market has changed, so you've got a lot of different lenders that have got really different policy books, i.e. what they agree to. So yes, well, is it self-funding is a big part of it, but it's not the be-all and end-all by any stretch. There still is various different criterias that fit around that.
That's it. It's not just one rule when it comes to mortgages.
It's not one rule
such an
at
open
all.
book, I suppose.
If only. God, that would make life easy. My word.
Now tell us, obviously you do the mortgages, but actually you're also starting up a new venture with Free Move. So tell us a little bit about your new estate agency.
One of, as I say, over the sort of years, it's always sort of played on our mind a little bit in terms of, okay, we help as many people as we can through our office, buy their house, drive down the cost year on year. And we thought, well, what can we do to try and help those people in the area that actually just can't afford to have a house, aren't going to have a house? You sort of look around the Walsall area, I've lived in the area sort of 15, 20 years. I think the balance just didn't seem right within our business. We wanted to put something back. And then at a conference, funnily enough, earlier in the year, somebody sort of posed the question, I mean, I've got a daughter that's sort of 9, and it really does change your outlook on life. Sort of in the future, what are you doing about your carbon footprint? And actually, we weren't really doing anything. And so during a bit of a brainstorming session, we came up with the idea, you know what? How can we pull this all together? We've been involved in a estate agency for years and years. And some mad person came up with the concept, you know what? Why don't we just do it for free? What you're seeing at the moment is internet estate agents coming and opening up. You're seeing more high street ones closing down, Sarah Beanie doing something or other online, and the price is tumbling all the time. And thought, right, okay, if you did something for £100, by tomorrow there'll be somebody doing it for £99. So you know what, let's just cut all this, we'll do it for free. So if you're looking at selling your house, it is true. You can now put your house on Rightmove and it's completely free. If you're a landlord, and so we love the landlords, they've really helped us out as much as anything throughout the recession. If you're looking for a tenant, instead of having to pay agency fees and so forth, you can get it on Rightmove, completely free, no cost at all.
So you hear that word free and you think, hold on a minute, there's got to be a catch. Is there any catch?
Kind of yes and no, really, in as much as, can we really do it for free? And the answer is, we're actually supporting from IMA, Independent Mortgage Hypermarket, supporting that side of the business to keep that sort of float. And we've been building to this probably for about 4 or 5 years now. And so, genuinely, it is free. And what we're looking for people to do is, actually, the more people that use it, the more people we can tell about, actually, the homeless people in Walsall. So we're working with the YMCA, who help literally feed those people who have to sleep on a bench at night, and they are out there, whether it's trying to help those vulnerable people with housing and different things like that. So we're working with those guys. On the carbon neutralisation, what's been absolutely fantastic, and the generosity for some of the people, we've been working with PhD Design, who've created all the logos. Shell have just come on board with us.
Oh, that's fantastic.
They've just donated us a woodland down in Devon to help with our carbon footprint thing. So we're looking to plant trees. And then finally, we were working with the Midlands Air Ambulance. So I don't know if you come across their story. So I find it absolutely frightening, something like that actually isn't funded by the government. It is only by donations. You think, God, the amount of people's lives they save, and that's how that works.
Yeah.
You wouldn't think, oh, I'll call an ambulance, and that's not paid for by the government.
No,
but
you
that
wouldn't
isn't.
really. Doesn't make sense. Does
Yeah.
it? Yeah.
So we try and the whole purpose of Free Move from here on is actually to get those messages out. And you know, if you use us and you're happy, you'll have saved yourself a shed load of money, and we'd love you to put some of that back into those causes.
Yes.
And that is our driving
Such worthy
factor.
causes. Yeah, definitely.
Yeah, by all accounts, fingers crossed, there'll be an element of people who buy those properties which are for sale.
Yep.
And at the end of the day, we are one of the best mortgage brokers in the country. So with a bill, they'll do their mortgage business with us.
Exactly.
But it's not compulsory. And the same as on the rental side of it, we already manage about 50 or plus houses for different landlords. And so some of those people that just want tenants, great, they can do that. Or if they want us to manage the property, then we'll do that. And yeah, we just charge a flat fee of 10%, but no upfront costs,
Excellent.
unlike most other agents.
Yeah, definitely.
So it really is a fantastic programme.
And when
people
does this
should crack on.
launch?
It's running already.
Brilliant.
As I say, we actually trade as estate agent in at the moment.
Yeah.
But it's just in the process of all being
swapping
swung
over.
back over to Free Move. So yeah,
fantastic.
it's there. If people want it, just pick up the phone.
Excellent. So tell us a little bit about, are you Midlands based?
Yeah, we're based in Brownhill, so we've actually got a high street presence there. And so for people looking at selling their property, then we can do that nationwide. People are looking for tenant finder only, nationwide. And with regards to the managed service, then typically within a 45-minute radius of Walsall.
Brilliant. Well, all the best with Free Move. Thank you for joining us today. We will be joining you next week for more at Midlands at Home, where we'll be joined by Matthew Moore from Edwardsmoor talking buy-to-let. So I'll see you then. Take care.